Good evening, traders. Richard Jacobs here, and welcome to the Underdog Trader Education channel. It's Wednesday, the 10th of January, the evening of Wednesday, the 10th of Jan. And I thought let's kick off by looking, as we generally do, at a daily chart of the top 40, which is what you're seeing up on your screens at the moment. And really, I suppose the message here, what we can see happening here, is after what looked like a promising start in terms of from a momentum and range perspective to the year, the market's pretty much, I mean, it's been heading up over here, but it's pretty much been bumbling in a very tight range to the upside over here. In fact, the out of the last 4 trading sessions, including and I'll speak a bit about tomorrow. We've classified though 3 of those as being C days, in other words, days where the market isn't really progressing its trend and potentially not unlocking its range. And those are the days we really want to actually reduce our trade size, reduce our risk per trade, and if necessary, even depending on our system's rules, stand aside, which is pretty much what we've been doing over the past few days. Following yesterday's trading action, the market did put in this higher high over here, and that sort of gave us the feeling that perhaps we're going to see something happen in the market today. And it certainly started out in a promising way in terms of, and one can just see that from the range of this candle. But if you look at the shape of this candle, I mean, the market pushed to the downside, but then the buyers came back in and simply pushed it back to the upside, and we ended up pretty much where we started the day. Market didn't put in a higher high, did put in a lower low, but obviously it didn't put in a lower close after that rally into the close. So again, for tomorrow, from our perspective, we pretty much going to stand aside. I mean, we'll put out the trade signals on our WhatsApp group for our HA trading system, but we trade that exceptionally small or not at all on C days, which is what we're going to have over there. So not much in terms of excitement, I suppose, but this is the time you need to exercise patience in terms of approaching the market and waiting for something to unlock. You can see that sort of waning volatility reflected in this falling average true range over the past week or so. Let me just zoom in a bit over there. Yeah, you can see, promising start and then sort of just falling at the moment. We're still well above the 50 period moving average, and in absolute terms, it's not the worst. In fact, it's better than it's been in the past, or the best it's been in the past 6 months. But certainly we don't want to see this this ATR falling any further, and in fact crossing below this 50 period moving average, because that wouldn't bode well for us as trend continuation or trend following traders. In terms of the broader structure, obviously we highlighted this here, this retracement, this breaker structure, the downside retracement back up into previous structure. Looks like we're trying to push towards the 61.8 retracement level, and it'll be interesting to see what happens should the market move up to those levels, which come in around about the 53,450 mark. As it stands now, looking at out of market prices, it's about 10:30 in the evening at the moment, and out of market prices put the market at about 53,200. So just a little bit above today's close. So it's going to be interesting to see the market can push in there, and if so, what kind of candle formation will come out of tomorrow's trading action. If you want to have a look at what this looks like on an intraday basis, let's pull up the 15-minute chart and look at some of the structure and things that's been happening over there. Okay, so here we go in terms of still in the current day's trading action. But as you can see over the past few days, what's really been happening is we spoke about, I think in our last video, we spoke about this range that the market had printed itself into, and we actually saw in yesterday's trading action a breakout to the upside as the market pushed to the upside, put in the higher high, higher close. Then I put in a relatively healthy retracement, which, you know, if you were structured trading the 15-minute charts, you could have taken this leg of the move here and look for continuation as the market pull back into the 38.2. Look for some kind of a candlestick, either this one over here or maybe this one over here, to try and ride that move to the upside for a few points. So that wouldn't have been a bad play. But notice what's interesting here now is that the market's pushed to the upside. Just kill that quickly. Market's pushed to the upside, but it hasn't put in a higher high. In fact, it hasn't put in a higher high or a higher close. Instead, what we saw today was market then pushed to the downside over here, pretty much, and then we get this retracement back up over here. Then we pull back down, and then we push up into the close, as we mentioned. So really, I mean, just eyeballing this choppy trading action. Lower high, lower low, lower high, higher low, and then a higher high. So it's all over the place. This is messy, and this is the kind of trading action which can really chop you around as a trend continuation or trend following trader. And I mean, again, we're talking, I mean, it's probably not the worst 500-point range over there, but just no follow through in terms of getting involved. You know, you get on the short side and whoops up to the upside. You get on the long side and it whoops down again. Very difficult to trade these markets, and hence the approach of standing aside has actually proved beneficial, which I'll show you in a minute. I mean, we did open up our trade sizing a bit today, so we took I think one losing trade on the top 40 took about 100.8, which is in the end of the world. But for the most part of the past few days, we've been standing aside and avoiding most of this whiplashing. Let's pull up that, in fact, let's pull that up quickly. It was, there we go. So here we go. This is the cumulative points that we've accumulated in trading the top 40. You can see we've done about 16 trades. 44% win rate, that's fairly standard for trend continuation, trend following system. At 3.88 to 1 is just not sustainable. It's very high, so not a bad start to the year at the moment, but again, it's early days. I mean, 16 trades in the context of something between 270 and 300 trades a year isn't statistically significant at all. What I want to highlight to you guys again is this move over here. We've got the weighted number of points, and we've got the standard number of points. And again, the standard number of points basically highlights the number of points that we would have accumulated had we had static trade sizing. In other words, we don't vary our trade sizes from trade to trade. And if we'd done that, we'd be sitting on about 550 points up for the year. As it is, by varying our trade sizes and sort of pushing the bias in favor of what we call A days, and actually reducing our trade sizes on C days, what's happened is we've managed to accumulate weighted points of 1,203. So that's quite a significant differential even at this early stage. And it just goes to just to highlight that one needs to start look at the environment in which you're trading, and not just trade blindly sometimes. So just going back to that structure picture over there, do we see anything obvious to trade over here? Not really. I mean, unless you guys are into advanced patterns, I'm not going to get into that really now. I mean, you can Google Gartley's bats and ciphers, things like that. Those kind of advanced pattern formations, they work well in markets, choppy markets like this, because you get all kinds of this is, for example, is a bat pattern over here, a bullish bat pattern. You could have gotten to the I said I wasn't going to get into it, and I'm drawing the bloody things, but basically, if you've taken this leg of the move here, you probably get involved on a 88.6 Fibonacci level of that level, leg of the move. Let me put that in quickly. 88.6, make that visible. Boom. The market actually reversed on a dime. would have actually gotten long right there on that 88.6. That's an example of a bad pattern. Looks to be a Gartley pattern, which is like a bearish Gartley pattern lining up over here, where you could potentially have, be getting short. But let's not go into much more of that. As I said, there's plenty of material out there on the internet, or you can drop me a line if you want to chat about some of these advanced pattern formations and things like that, and how you can trade them. But at the moment, there's nothing from a structural perspective until the market really starts showing its hand in terms of which direction it wants to go. I mean, short term, technically, it is bullish. You're looking for retracements, but if you just want to trade structure, I'd be waiting for that 53,300 level, which is acting as a bit of resistance at the moment to break, and start looking for some price structure again. So that's what's happening on the short term on an intraday basis. Just see something. Give me 1 second. Pushing up. No, nothing much to say over there. We looked at the results. Okay, let's have a look at what's been happening on the international front, on our little trade challenge that we've been doing. It's been quite interesting. Not altogether in our favor, those are the results at the moment. Let me just input. I've got 4 open positions, and I'll run through some of those with you. Let's just input where we are as it stands now. 1732. The Aussie dollar is sitting at 1762. The euro pound is sitting at 3.4 and minus 14.07. So bit of a mixed bag. 50% win rate. That's not too bad at 1.69 to 1. Overall, not too bad. Not too fair. Not too unhappy with the results to date, and where we positioned. But it's not been. I mean, it's not been easy. The markets have chopped quite a bit. So let me pull up some of these open positions for you, and then just show you a couple of trades that didn't work, a couple of trades that did work, that kind of thing. Give me 1 sec. Okay, so this is the Aussie dollar position that we're in, and as you can see, what we had was market and put in this push to the upside, they put in a retracement, then pump to the upside again, put in a higher close, and then we had this retracement. We actually took 2 bites at this. We got long as the market retraced. You can see here with this green arrow, we got long, tried to push to the upside, nearly got there, and the market rolled over to the downside, stopped us out. But we got caught by the support level over here, and then we got long again. And what's nice about this is we managed to get involved for very, very small, as you can see from this target reward to risk. We got involved for a very small target, very small risk level at least, and we continued to push the upside. Nearly got into that target zone. It's rolled over a bit. It's still holding, so we sort of sitting on our hands waiting to see if we can push into that target zone and take off some profits over there. Pretty similar on the Euro USD. Euro USD is trickier. What's happened over here is the market pushed to the upside, put in a retracement, not a very deep one, pushed to the upside again, put in a higher high, but it was unable to put in a higher close. So one could actually view this as a potential, or as a double top right there, which was validated on this close below the midpoint, and then the market just followed through and pushed down over there. The other way to look at it is got this leg to the upside over here. This is simply a retracement within structure. We had some reversal candles. I think it was last night over there we got involved, I think after this one here, around about those levels, and again the market started at well, pushed to the upside fairly hard. Again, it's rolled down over here, losing a bit of momentum, so we're just keeping an eye on it. Again, great but target reward to risk. I suppose one could argue that being a bit greedy, could have aimed for this previous price structure level over there, and then we were taking off some decent profits. So be it. We are, shooting for decent reward to risk on these kinds of trades, and because the risk is really just so small, we're able to get in at such a decent price. I'm not too fussed, even if the market does roll to the downside over here. important thing is we're applying good money and risk management, so any one individual trade is not really going to hurt us that much. A couple of the fresh trades, euro pound. This one's interesting. We had this push to the downside every year, market put in a lower low. We got this retracement back up. We had this decent looking reversal trend continuation candle over here. Seemed to indicate that the retracement was at the end, so we got short. We put our stops in above the swing high, potential swing high, and we're looking to ride it down into that zone over there. Again, decent. We're risking £22 to win 46, which is a nice target risk to reward. And then the final one, which is underwater at the moment, is this pound to USD one. This is trickier. I mean, you got this push to the upside, you got a retracement over here, but the market's really been consolidating sideways. We had this big nice bullish candle over here which we got involved in. After that candle, in fact, we got involved in a much better price, so we got in at a much better price as the market pushed to the downside. So we managed to cut the risk on this trade to a manageable sum. We're risking about £40 or so to make £60 if the market can push up into that target level. So again, we'll just keep an eye on that and see what happens from here. There's no new potential trades that I have on the radar in this particular trading challenge, but I mean the principle remains what we just being reiterative in terms of we're looking for markets that are in trend. We're waiting for those retracements. We're looking for indications of continuation, and we're trying to make relatively quick profits on these. The key though is we're trading so many pairs that it just becomes a process of repeating. We're not looking for any big profits from any one individual trade. We just want to chip away and take good profits at decent reward to risks with a win rate which will allow us to generate positivity in terms of expected value. So that's pretty much it. There's something I haven't done which I should have done earlier, so apologies for that. I haven't looked at what's been happening in two areas. Firstly, on our currency, so rand dollar. Let's pull that up. There we go. So 4-hour chart of the rand dollar right there. This is the congestion zone, consolidating, moving sideways, not really breaking out for the most part. If you look at what's happening today also, or the past couple of days really, also nothing much. We did pop up here, put in a higher high over there, but it's really not a higher close, so we continue to chop along sideways over here. So no real influence or no significant influence flowing through from the rand dollar exchange rate at the moment. As I said, we either need to see a deeper retracement or we need to see that continuation move to the downside playing out. And on the US front, again, while the US is now in retracement, we had this long push to the upside for pretty much the whole year to date, and finally we're starting to see a retracement playing out. It's not a very deep one at the moment. I think if we add a 23.6 fib, yeah, we pretty much pulled down into that 23.6 over there. The last couple of 4-hour candles look not bullish, but they have been green. So we have to see what happens from here on the US markets. It could continue to the downside from here. If we were to trade this, I would prefer deeper retracement, maybe towards this bit of consolidation shelf lining up with the 38.2. That would be a decent area to try and get involved for continuation move to the upside. So we'll keep an eye on it. But it looks like it's already starting to tick up. Not confirmed yet, but it does look relatively bullish in the sense that we're putting in these green 4-hour candles and not really continuing to the downside. So if we get some bullish US trading action, that should translate into some positivity on our local market as well, especially in the context of a rand dollar exchange rate which isn't doing much, so it's not really influencing or adding a great deal either to or taking from the direction of our market. So at this stage I'd expect the market to push up a little bit tomorrow, and it's going to be interesting, as I said, to see if we can penetrate or push past that 61.8 and then where to from there, from our perspective. So guys, that's pretty much it. As I said, tomorrow is one of those days we're also just going to stand aside to a large extent, and we'll put out those trades on the WhatsApp group, but we're going to be trading them very small, or even null trading them, not at all. And then we'll see what happens tomorrow, and perhaps potentially on Friday we can start opening things up again once we find the market hopefully unlocking itself. So guys, that's it from our side. I wish you all the best in your trading, and I shall chat to you in our next video.